My attempt here was to kind of give an update with regard to where things stand with regard to the administration's tariff rates on selective countries here. Now, mind you, this is the chart that keeps on changing. And so this will change probably consistently, in the days, weeks, months, so on and so forth. But again, a lot of activity with the current state of tariffs. I think when we look at where we were from Liberation Day, April 2nd, the column on the very far right to where we were from August 6th and the changes that have been made so far, we've seen a lot of green where basically those effective rates have come down since Liberation Day from the letters that were sent August 6th. But the ones that I think, are going to be really important here for agriculture, highlighted Canada. They're one of our top three largest trading partners in agriculture. That rate right now is currently at 35% with an additional 10%. With regard to energy imports coming in from Canada. Mexico, there was recently a 90-day extension as of July 31st. That's currently at 25%. But again, a lot of moving pieces as it relates to tariffs. The one that I think is going to be one to watch here, as a current event, but also too when we talk about inputs that Mark will talk about here shortly is Russia, and talking about the global fertilizer kind of flow here and trade flow. As I think when we think about the Russia-Ukraine war and the president and the administration's attempt to find peace between Russia and Ukraine, there has been signals where, if there's been no agreement or no progress made there, that the administration could provide secondary tariffs up to 100%, and even so much so anyone that does business with Russia. And we just saw that here with an effective rate that increased from 25% to 50% as the Indian government is looking at buying crude oil from Russia. So again, looking at this, a lot of this will change. A lot of activity is going to be made here for tariffs. But again, I wanted to provide you some indications on what this means for agriculture and some of the trade flows that are important for agriculture. So here, one of the things that I put on this chart, and maybe a little bit busy, but I have a lot of select commodities here in the chart on the left, where basically I take net exports as a share of domestic production. So if you look at a commodity like corn, you can see that number, it states about 14% of net exports make up the share of domestic production. So we're a net exporter of corn in the US. So oftentimes when you see the bar chart go to the right, we're more of a net exporting situation for the commodity where some of these tariffs could be more impacted if the country does retaliate, rather than those commodities that are on the left-hand side, which is a net importer for those commodities. If you look at the chart on the right, a lot of this will be determined here with regard to Mexico, Canada, and China. You can see here collectively that as of 2024, the total export value from those three countries is around 48%. So again, a significant chunk of our ag exports goes over to Mexico, Canada, and China. I think one of the things that needs to be, reiterated here is, and what we learned from the trade war with China during the first Trump administration, is kind of just how we've displaced some Chinese or U.S. exports going over to China with those going to Canada and Mexico. And you can see that with the trends from the red line on the chart on the right, with the lines with the blue and the green. So again, those big three are going to be important here for agriculture. So what does this all mean, and why it's so important here when we think about this from an analyst standpoint, and what total impact this could have? You think about the decision tree that kind of occurs here with tariffs. First and foremost, the administration has to put in place the tariffs. Are they broad-based? Are they for selected commodities? That's kind of the first and second decision point. The third decision point is, once those tariffs could be in place or threatened, will the country then retaliate, and on what commodities? So that's kind of the third and fourth decision point with regard to the decision matrix when we talk about the trade flow between two countries. But here what I've got basically the top country, or the top commodities that we import from Mexico on the left, and the top ag exports to Mexico on the right if they were to retaliate against us. So you can see here we're a net importer of ag goods coming into the U.S. from Mexico. The top three imports that do come in from Mexico, think about beer and spirits, make up about 28% of that $48.8 billion value that we saw in 2024. Second, followed by avocados and blueberries at 24%, and other vegetables and preparations at 22%. So those are kind of the big three with regard to U.S. ag imports from Mexico. On the flip side, we look at the top three with regard to U.S. ag exports. Very, very significant when we talk about overall Midwestern crops or Midwestern commodities, excuse me. First is of that $30.3 billion value, corn makes up about 19% of that value of 2024 total value, soybeans at 8%, and then pork at 7%. So again, very heavy Midwestern commodities represented in the top 10 ag exports to Mexico. Looking at Canada, again, kind of same theme here with regard to the charts that I've laid out here. Overall, you can see on the import side, the chart on the left, about 15% is of the total value imported here from Canada is in baking products. Second is frozen vegetables, mushrooms making up 13%. And then third, other distilled spirits coming in from Canada. Looking at exports here, you can see, food preparation and non-alcoholic beverages making 14%, vegetables and other preparations making 12%. The one for Midwestern commodities that I think is important here is fuel ethanol. That's about fifth or sixth with regard to the top overall value of exports. That makes up about 5% of the overall total value of our exports to Canada. And finally, China, we really don't import a lot of commodities here from China. The number one being honeys and teas, some of those horticultural products, some vegetables and other preparations there with regard to that $5.86 billion import value from China. But the big one here that we've got to talk about, I'm going to talk about this here after this slide, and Mark's going to talk about this in his portion of the presentation. To me, it's all about soybeans when we talk about overall exports coming over to China, as we are kind of seeing this play out here currently within this marketing year and the next marketing year for China. So again, of that $24.65 billion export value over to China, about 52% comes in the form of soybeans. So why is this important? So when we look at overall soybean usage here, one, I've taken this on average for marketing year 2017, 2018 through 23 and 24, and I've excluded the years during the trade war during the first administration. So if we think about total usage here within our soybean balance sheet, 51% comes in the form of soybean crush. And Mark's going to get into that during his portion of the balance sheet for soybeans. The rest really comes from some seed and residual stuff, but the major portion of that is in the form of exports. And so of that 47%, 25% is made up of exports going to China. And if we look at the chart on the right and we look at the allocation of exports that do go over to China from a 10-year average perspective, you can see the window of opportunity where we do export a lot of that soybean commodities between the months of October and December. So why is this important here? One, on the good side of things, I think from the positive standpoint is the U.S. and China continue to talk. They try to find common ground, and they try to see if they can find something that works for both countries. The bad news here relates to basically if President Xi and President Trump don't meet until October, the question here is, are we getting into that window where we export a lot of our soybeans over to China? So I think a lot of uncertainty kind of rests in this place here, but a lot of significant uncertainty in the soybean space in particular. Looking at global export market share, fertilizer, this specifically gets into what I talked about with regard to Russia. Here, what I'm going to talk about within the next couple charts here is looking at fertilizer, the global export market share for key countries that are in this space. From a total consumption standpoint within the U.S., we currently import about 18% of our total consumption as of 2023. You can see here that Russia, when we think about the big global export countries that export in the global marketplace, Russia, China, Qatar are the top three as of 2023, making up 18.8%, 15%, and 5% respectively. On the phosphate side of things here, now remind yourself on the phosphate side of things, we are in a situation where we do have low ending stocks here for a large consumer in India. with regard to phosphate. So the market is reacting to that when we are seeing MAP prices increase here a little bit. But we do, we do import about 13% of our total consumption here on the phosphate side, with Saudi Arabia, Mexico, and Israel being our top importer or destinations where we do import our product. But again, Morocco, China, and Russia make up the top three global importers within the overall marketplace. Looking at potash here, this is the big one with regard to what we import with regard to potash. You can see here that we import about 97% of our use, which is currently the most recent data from USDA. You can see here Canada, Russia, and Belarus are the top three players in the global export marketplace as determined by their market share. So again, Canada getting those relationships kind of fixed here with regard to the effective tariff rate that we have for Canada, and then obviously Russia, and then the partners that do business with Russia and Belarus. Again, potash and those trade flows are going to be really important here with regard to overall price.